Hey everybody, Courtney Smith here. Welcome to our very first Wall Street Winners for 2022. I took a couple weeks off and now ready for action, ready for another 50 straight weeks of exciting stock market action. All right, lots to talk about today. Lots and lots. So let's dive right into it. So first of all, and I'm going to stop on some new things because there's a lot going on, So first of all, let's take a look here. The S&P breaks to new highs, as I told you that it would 2 weeks ago. But look at the purple predictor. The purple predictor did not move to new all-time highs. So you can see the stock market popped to new highs, but this purple line, which tells us what the smart money's doing, failed to make a new high. So this is really bad news for the stock market because the smart money's selling. They're using this rally to dump their positions. Well, I don't know about you, but if I have a choice between being the smart money or the dumb money, I know who I'm going with. What about over in the Dow? Well, here in the case of the Dow, we can see buying pressure really perked up a lot. And we drove the Dow to new all-time highs as well. Now, I don't have the purple predictor on this chart, but what about the NASDAQ? NASDAQ has not made new all-time highs. We're still way below our late November highs, but it did break the previous highs. That's good. But the purple predictor didn't. In other words, even here in NASDAQ, we're seeing the smart money sell the market, not buy the market. So that's a negative for the market over the coming month. Seasonality, I'm still ranking it as a neutral. I use IWM, and IWM did not even break the highs that it made a month ago, less than a month ago. So that's pretty weak. So seasonality, weak. Same thing with the utilities. We're during the neutral period of time. Okay, so this is the chart from Stock Trader's Almanac, which I highly recommend that you subscribe to. Obviously, we do a better job of picking stocks, but they do a great job on seasonality. So as you can see, the next 2 weeks are really sideways. It doesn't matter what scenario you look at, but let's stop here for a second. Here's the thing. The black line up here is all years. That would be the lame-o way to use seasonality, but we're not going to do that. No. We don't do anything lame-o here at all. Now, if we take this blue line, there's a blue line. It's kind of buried here. It drops to here. Then it rallies up into mid-April. Then it kind of drops, then goes sideways, and then rallies. That's all midterm years. Now, that's a better line to use because midterm elections have a big impact on the stock market. Now, we can break that down even further. The purple line, which is this line right here, a little bit more bullish early in the year, a little bit weaker through the summer, and equal in the winter. That's this purple line. That's the first term for a Democratic president midterm. Then we can go to the green line and the red lines, and you can see they're pretty similar. The green line is first term for a midterm, and this is Biden's first midterm, or the second year of a new Democratic president. That's the red line. So there's 2 reasons to think that it's probably going to be the red or the green at this point. So definitely not the black. But whatever happens, it looks weak, flat to weak until the end of March, end of February, then a nice rally up into the latter part of April, then very weak to the end of June. Then we're going to get either flat or a rally, depending on which scenario occurs, then a dip into the fall, and then the last quarter should be very, very good. So there's some commonality between all of these lines. It's a matter of degree, not so much direction. But the point is, it's a crappy year. Okay, that's what the seasonality is telling us. It's a crappy year. So I just said that the smart money's selling. I think now we can see one of the reasons why they're selling. So not that the next 2 weeks are going to be particularly bad seasonally, but they're not going to be good either. Let's carry on. And by the way, what we'll do is as we trade through the year, oops, I went back too far. As we trade through the year, we'll develop which one of these lines is the one that is most accurate. Okay, money, though, still flowing in from the bond market. So stock market investors are selling the market, but bond market investors are buying the market. They're selling their bonds and buying stocks. And that's what caused us really to go to new all-time highs. Now, you don't hear this type of analysis anyplace else but here, because I'm telling you, where's the money coming from? And that's all that matters. Is there new money coming in to buy stocks? But at the same time, they don't want risk. Now, I highlighted this 2 weeks ago or 3 weeks ago, whenever it was. What's happening is bond market investors are flooding out of bonds and into stocks. But as you can see, the market doesn't want risk. So what are they doing? They're buying utility stocks. They're buying consumer staples that have high dividends. They're buying REITs, real estate, because they have high dividends. You got it? They're not buying technology. They're not buying healthcare. They're not buying industrials. They're buying high dividend conservative stocks, so they don't want the risk. That's why you're seeing the risk collapse, is because the drivers of the stock market right now are bonds. Bond buyers are saying, I don't want these crappy bonds. Get me some high dividend stocks. And so they're buying the high dividend sectors of the market. But the speculators are bailing out of the stock market. Okay, global shares not keeping up with the U.S., so who cares? All right, yield curve starting to move higher. And I think we're going to continue to move higher. If we look at the bond market, you can see we're drifting lower, which means higher long-term interest rates. You can see that the smart money is selling. The purple predictor is weaker than the price action, so the smart money is selling bonds. You got it? Is this all falling together? Because you see, here at Wall Street Winners, we show you what's really happening in the underlying the market movements. People are bailing out of bonds. The smart money in particular is bailing out of bonds and buying dividend-related stocks. Okay, bond key factors. Let's just quickly go through them. Starting to move up. This is the CRB. That says higher interest rates. Gold starting to move up. Higher interest rates. The blue line, 10-year treasuries in Germany, moving up. Those are the three key factors. Guess what? U.S. yields heading up. And of course, this is on the back of the higher inflation that we see in the CRB, this massive bull market in the CRB. We don't see it quite so much in gold, but we do see it here. Okay, U.S. dollar down. I think with bonds starting to move back up again, that this drop is going to be short-lived. Okay, it's going to be short-lived. Fully paid up members, we'll break it down in a little bit more detail. Gold is starting to perk up here, all right? Now, one of the things that's really been concerning me is the fact that we've had an exploding inflation, but gold did not move higher. Finally, it's moving higher again, but will it fail like it did in November? We'll have to see. I can't get bullish on gold yet until we break these old highs over here. Right now, it's just a neutral market. Our indicators remain pretty neutral, kind of sideways, bullish, bearish. So what do? If you got one bullish, one neutral, one bearish, the best thing is to get back in the pool, order another pina colada. Oh, wait a minute, it's winter time. All right, cuddle up in front of the fire and order another pina colada. Or maybe an eggnog. All right, crude oil has started to perk up again. I think that this is not going to go much farther. We're slowly seeing an increase in supply here, and I think that there's going to be a big disappointment. And the disappointment is going to be that the economic numbers around the world are going to start to not be as good as they have been. So everybody's gotten really excited about the strength of the recovery from the COVID recession, but that recovery's over now. We're going to start to see we're going to start to see economic numbers that are weak. And at the same time, we're going to see higher inflation. The combo, it's called stagflation. We haven't seen it since the late 1970s. That's right. We're taking you back to the Jimmy Carter years. So exciting. Bitcoin. We've been bearish on this for a while, still remain bearish. Looks like it's going to probably crack that $45,000 level. And if it does, you really got to get short. Now, I haven't been short. I've been bearish, but not short. We made money on the long side. But if we break those lows at 45,000, I got to get short. Got to get short. And, people say, well, how can you get short? I don't really like trading Bitcoin because there's so much fraud and because they're stealing it all the time. So I like trading the futures or the CFDs. I actually prefer trading the derivative of Bitcoin rather than Bitcoin, and it makes it easy to go short. Okay, freebies. Listen, this is really, really important. You really need to subscribe to the fully paid up member version. Last year was an easy year to make money. I've just putting together a over 50-minute super special video report on what's going to happen in the coming year. And if you subscribe to Wall Street Winners, we'll give you a copy of that. And it lays out exactly in gory detail from fundamental, from monetary, from sentiment, from seasonal, from long-term technicals, short-term technicals. I develop a scenario, and then I, most importantly, develop a trade plan. This year is going to be much tougher year to make money. You saw that seasonal chart. It's going to be much tougher this year. So you need to level up your investing. Subscribe to the fully paid up member. Go to WSW 2021 and subscribe. Your bank account will thank you. Don't sit back and be in June and be sitting there saying, oh, I'm really not making any money. Oh, I'm really not making any money. Now is the time to act. You can see that seasonality is not pretty. You don't want to miss out on the profits that we're going to make this year because I have a strategy for making money, even in spite of what that looks like. And I reveal it to fully paid up members because what do they get? They get more advanced analysis, and more importantly, they get my specific trades that I'm putting on in my account. And remember, I ran the #1 performing growth mutual fund in the United States. So I know a little bit about this marketplace. All right, listen, freebies, we love having you here, but you really need to become a fully paid up member and get that special 2022 Outlook video. Go to WSW 2021 and sign up right now.